Yo guys, Dev Presidents here, coming back to you with the episode 2 of the Dividend account journey. Last time we ended off where the account was at 14.5. Right now we're sitting at 14,816. That's mostly due to deposits and a little bit of share appreciation plus the dividends. You can see right here. The last episode was around, I think, right here. And then we made some deposits and some shares appreciated. We're up 422, 3%, and we got $66 in dividends in the last month. For the week, we're down 3%, down 400 on this little market dip. That's why I've been depositing. For the day, we're down just 42. I'll go over stocks and everything that went up and down in that month since the last episode. So we see our number one targeted holding right here, Verizon, down 2%. We'll talk more about Verizon in a little bit. Apple, 8% up. American Express, 3% up. Dominion, 8% up. Pepsi, 5% up. Wendy's, Microsoft, 3M, Altria, JP Morgan. Intel down 12%, man. Intel's dying out. We're going to talk more about Intel. AbbVie, Rio, Shell up 12%. Energy's been booming on this little dip. Grief, Shaw, CVS, UPS, nice run. And NextEra Energy, nice run, 10%. Energy's been really good this week. Alright guys, we'll go over the activity on the account since the last video. The last video was August 8th, so we made a deposit on the 10th, $100. We collected some dividends from Apple, AbbVie, nice AbbVie dividend right here. Some more small dividends from the REITs. We deposited another 100 on the 18th. And with that money, we bought Intel, Verizon, Shaw, AbbVie, and a little bit of Digital Reality Trust. Did another small deposit on the 22nd, followed by a bigger 150 deposit on the 23rd. With those, we bought Intel, JP Morgan. This is just a spin-off from one of my REITs. And then on the 23rd, we bought all of these. We bought JP Morgan, Verizon, AbbVie, Intel, Shaw, UPS, and then small little bites out of these REITs. Still inching into the REITs, guys. Only 1% of the portfolio. So that's the activity in the last 2 weeks on the account. Now we'll kind of go over game plan and how I'm going to manage the account over the next 2 weeks. First, we're going to go over the boomer stock Verizon. Usually when you invest in boomer stocks, you expect them to stay pretty even, level, and Verizon did pretty much the exact opposite while it slid 30% in the last year. Verizon did get also cut out by Berkshire, and that's very bad news when the number one boomer in the market cuts Verizon. I can see why he did it. Verizon right now, guys, as a whole at these levels, T-Mobile and AT are running laps around it. We're buying more for an eventual sell and divest strategy while I re-raise tech into my top holdings. If and when I do sell Verizon outright, I'll look to replace it with other telecom plays. Right now, I'm thinking either AT&T or T-Mobile. It's competitors. I do like T-Mobile the best, but AT&T is looking like the best value versus Verizon and T-Mobile. Next, we're going to start talking about Intel, guys. You can see Intel in the middle of my portfolio right here, 54% down. That's one of my largest losers. It is the largest loser. It slid way farther than I don't think anyone thought, but I'll tell you why it's a strong buy here and hold. So the free cash flow is coming down, and if you can see right here on this free cash flow chart of Intel in previous years, this is looking at the last 5 years, you can see that when the cash flow decreased year over year here, that the stock price took a big dip, 15% down. When the free cash flow increased, the stock price bounced back heavily. And then you can see here with this big dip off in the free cash flow, huge 50% down, as you can see. And then if you look here at some of the guidance Intel has released, you can see, yes, the free cash flow is coming down. But in 2023, they plan to raise the free cash flow. The reason it's coming down, guys, Here's a better chart of the free cash flow. It will actually go negative for the first time in a while in 2024. Some people are saying while they're spending all this money, AMD and Nvidia are just piling on and gonna kill them, but I'll tell you why that's not the deal. You can see Intel is bolstering. The reason they're losing all that cash flow, they're using up all their money now. I think it's almost at $90 billion right now on refabbing these factories. And this map doesn't show Ohio. They just put a $40 billion investment in Ohio, building a new factory. And what's this going to do for Intel? Well, patient investors are going to see that these factories and all this money that Intel's spending, they're going to get cut like tax breaks on it. They're not. You think Intel is going to spend $90 billion of their own dollars? Then you're crazy. The government released the CHIPS Act. Intel is probably the most American of the chips because Nvidia and AMD, while being headquartered in California like Intel, are pretty much very reliant on Taiwan. 90% of their supply is coming out of Taiwan. So Intel, if anything happens to Taiwan, a chance of a Taiwan invasion, anything like that, puts Intel into very sleeper territory. Any attack would block Nvidia and AMD supply routes for weeks. Intel does not have those problems. It doesn't rely on Taiwan whatsoever. And because of that, the government will continue to give Intel money, give them breaks, give them tax breaks. You think Intel just picked Ohio randomly? Ohio obviously gave Intel some kind of tax break. They're not spending $90 billion. They're probably spending half of that. So these free cash flow charts are kind of inaccurate, and Intel's bounce back is, I think, going to be kind of crazy back to 60 within the next 2 years. With the dividend paying out the way it does too, it's a definitive buy for me. I'm raising it probably to 7% soon here and trying to buy that dip even more aggressively. Another interesting stock, guys, I want to talk about this in the portfolio right now at 6%, right in the middle of the pack. We added this not too long ago, maybe 6 months ago on the dip, is 3M. I love the dividend from 3M. And you can see here, 3M is actually announcing 2 spinoffs. One for its healthcare business, which is going to take a lot of revenue away from 3M, but it's also doing a spinoff of its much smaller food safety business. And both will obviously be awarded to shareholders. And they're trying to do this to create long-term growth in the company. And I personally like the idea because 3M has been kind of being too general all over the place. I like it to spin off those two and focus more on the original science, industrials, and all that. Because the industrial sector, I think, is a very good sector to be in while America is in this investing phase, while it's low, where a lot of bills are coming out, new investments, new energy plans, new factories, etc. 3M should do great, and it pays an amazing dividend. So I'm raising that one probably to 7% from 6%. Not a big increase, but it is going higher in the portfolio. Some other plans, looking at the other stocks on the portfolio, guys, is I love NextEra Energy's earnings report. I'm looking to raise NextEra Energy higher in my portfolio, maybe to that 3 to 4% range. Slowly, guys, I want to take Dominion Energy. I want to take the gains on Dominion and lower that maybe to 5%, and then put NextEra at 3 to 4% because I don't want too much invested in energy, all in energy, but it is definitely a great investment for the next 5 to 10 years with all the money coming into the energy sector. Next, we're going to be going over JP Morgan and Rio Tinto. JP Morgan, they have a lot of cash on hand, guys. They haven't dispersed it yet. They put a lot of cash in the reserves when the market dipped. Once they put that cash back onto the balance sheet, the stock price should increase. So I'm buying more. You guys saw that in my activity the last 2 weeks. I was buying more JP Morgan. I'm going to keep buying more, and I like it in the 6 to 7% range of the portfolio. Another one, guys, is Rio Tinto. This is my anchor for the portfolio. It's my commodities, iron, one of the biggest iron miners, diamond, copper. The commodities are cooling off right now, guys, but I don't see them dying out like other people do. Commodities, I think, are going to stay at these elevated levels for a long time to come. Right now, it's kind of falling off because of the China slowdown. People are scared, but I'm holding Rio. I love the dividend. just hold for now. Alright guys, someone in the last episode, the first episode of the series, asked me to go over how much dividends I've received from each of the companies, so I'm going to go ahead and show you guys that. This portfolio is about a year and a half, 2 years old, I'd say. Not all the companies I've had for that long. Some companies I've added 6 months ago, some companies I've had for 2 years. So I'll kind of tell you guys how long I've had them, and I think it will actually show. So Verizon, you can see I've earned $64 in dividends, while it's depreciated $260 for a negative 30% gain. Apple, very slow dividend on this one, $9 pretty much in dividends, but the share appreciation almost $300, 77.77%. Lucky number right there. American Express, this is one of my favorites, guys. We banged out 58% on AXP so far, $200 in share appreciation, and $16, almost $17 in dividends so far. Those three I've been holding for at least a year and a half, 2 years now. Dominion, we have 32% return, $105 in share appreciation, $38 in dividends. And it will show you right here when I started my investment in each company. Pepsi, this is a somewhat recent one, last year. 33% return, $160 in share appreciation, and $23 in dividends. Wendy's, down 7% so far, somewhat of a recent buy. $15 in dividends, not too bad. Microsoft, $10 in dividends. It's just like Apple, very small dividend, but $100 in share appreciation. Altria, $53 in dividend and $14 loss on the shares, but the dividend paid for the share loss, and we're up 15% so far. 3M, this is somewhat of a recent, we've held this one for at least like a year and a half now. We didn't really inch into this one until it started dipping more and we started buying more, but so far we earned $34 in dividends, which is pretty good, and $112 loss on the shares, $16 loss so far, or 16% loss so far. JP Morgan, 14% down, $81 down on the shares, guys, and then $30 on the dividends. Intel, $35 on the dividends, minus $246 on the shares, 50% down. AbbVie, this is one of my better stocks in the portfolio, $200 on the stocks and $50 in dividends for a 97% return. Shell, I divested a lot from Shell, but when they spun it off and renamed it, whatever, I reinvested in. I made a really good profit in the last year and a half on Shell, and now I've just kind of moved it down to like my 4%, 5% bottom of the portfolio, as I see oil kind of in a medium range right now. It's kind of in a frothy position. Oil has been coming down a lot in America, but we did make $16 in dividends since the February 1st, 2022, and $32 in share appreciation. Rio Tinto, ooh, look at that dividend, almost $100 in dividends, $86 dividend gain, and $126 down on the shares. Since that dividend almost paid for that loss, we're only down 7%. Grief, we're up 30% on this one, $90 market gain, $16 in dividends. Shaw Communications, $26 in dividends, $14 in share price appreciation for a 12% gain. CVS is one of my better ones. I was up and I had this up in my top portfolio, but I divested and took a lot of profit out of this one. And it was a great time to sell and take profit, honestly. I was up at almost 200% on this one at one point. Been investing since January 2020 in CVS. We earned $18 in dividends and $183 in share price. And this is a somewhat new one, UPS, $5 in dividends, $11 in share appreciation. Kimberly-Clark, $10 in dividends and $3 in share appreciation. And Next Era Energy, very recent acquisition, $19 in shares and not even $1 in dividends yet. And I know some people are going to want to talk about or want to know about the REIT portfolio. The REITs have been doing pretty good. You can look over the last month. Hazy right here, Hannon Armstrong Sustainable Infrastructure, is booming. This is a green energy, solar energy REIT. And of course, with the news and everything, with all the money going into green energy right now, that's going to boom. 15% boom from Iron Mountain. They store information digitally. Public storage, just an amazing REIT, giant. You see them everywhere, wherever you drive. And everything else is kind of just 5% up or down, not really much. Medical Properties Trust down 8%. They focus on medical properties such as hospitals, urgent cares, etc. They're nice to keep in here. They're down right now. I'm going to keep buying all of these, but not a big investment into any of them, guys. You can see I'm not going too deep into REITs yet. Once I get maybe more of a dip, I'll buy more. We're down, I think, only 10% in this portfolio. If it goes down 20%, we'll probably double it up to 200, 250. Thank you guys for watching episode 2 of the Dividend Account Journey. Episode 3 will be coming 2 weeks from now. Subscribe if you haven't yet and turn post notifications on. Thank you.